In the wake of Donald Trump's victory in the 2024 US presidential election, fresh economic data from December has revealed something interesting. A surprising number of major economies have started reducing their holdings of US government debt. Out of the 20 largest economies that traditionally invest in US Treasury bonds, 16 have decided to scale back. This shift raises critical questions. Why are so many countries pulling away from US debt? And what could this mean for the future of global finance? Major sell-offs. Who's leading the trend? Some of the biggest reductions in US Treasury holdings have come from key allies and economic powerhouses. The United Kingdom, for instance, slashed its holdings by a massive $44.1 billion. Japan followed with a $27.3 billion reduction, and Saudi Arabia cut back by $15.1 billion. Other countries also made smaller yet significant reductions, including China, which trimmed its investments by $9.6 billion, Switzerland by $9.7 billion, and India by $14.9 billion. But what's behind this sudden pullback? Let's break it down. Why are countries selling off US debt? The decision to cut back on US government bonds isn't random. It reflects a growing sense of caution among global investors and central banks. Many countries are reevaluating their exposure to US debt in light of Trump's potential economic policies. Historically, nations that hold large amounts of US debt closely monitor factors like trade policies, interest rates, and diplomatic relations. If they sense uncertainty or risk, they often reduce their holdings to protect their economies. One major concern is the US government's borrowing habits. If Trump's administration pursues aggressive spending or tax cuts that increase the national debt, investors might view US Treasuries as less attractive. A surge in foreign bond sell-offs can drive up US interest rates, making borrowing more expensive for both the government and ordinary Americans. This means higher mortgage rates, costlier business loans, and overall tighter financial conditions. The bigger picture, a shift in global confidence? This trend isn't just about numbers. It signals something deeper. For decades, the US dollar has been the world's dominant reserve currency, the backbone of global finance. But when foreign governments start selling off US debt, it raises doubts about the dollar's long-term stability. If this shift continues, it could lead to a diversification of global reserves into alternative assets such as euro-backed bonds, gold, or even digital currencies. The post-election sell-off of US Treasuries might also indicate deeper geopolitical tensions. When trade disputes flare up or diplomatic relations strain, major investors quietly move their money elsewhere. A country doesn't need to make a public statement to influence financial markets. Small, steady reductions in US debt holdings can send a strong message about shifting global alliances. De-dollarization. Reducing dependence on the US dollar. For years, central banks worldwide have been exploring ways to diversify their reserves and lessen their reliance on the US dollar. This movement, often referred to as de-dollarization, is gaining momentum. China, for instance, has steadily reduced its US Treasury holdings to $76.1 billion as of October 2024, the lowest level since 2009. This is part of China's long-term strategy to insulate itself from US financial influence. Countries are also accumulating more gold as a hedge against potential US sanctions and dollar volatility. Nations like Poland, Turkey, India, Iran, and China have been leading a gold-buying spree, recognizing the need for a diversified financial safety net. This shift isn't just theoretical. The numbers show a clear move away from US-centric financial dependence. Currency control and strategic financial moves. Another reason for the Treasury sell-off is currency stabilization. Some countries offload US Treasuries to strengthen their own currencies. Japan, for example, reduced its holdings from $1.87 trillion in November 2024 to $1.06 trillion in December. This was likely a strategic move to support the Japanese yen. By selling off US Treasuries and buying yen, Japan was able to stabilize its currency and counter inflationary pressures. However, this approach has trade-offs. While it helps strengthen a country's own currency, it also means holding fewer US bonds, leading to lower foreign reserves in dollars. What's happening with US Treasury yields? Following Trump's re-election, Treasury yields have been climbing. Several factors are at play here, including policy changes on tariffs, immigration, and government spending. Higher inflation expectations have also contributed to rising yields. When inflation goes up, so do interest rates, which pushes Treasury yields higher. This, in turn, lowers the value of existing bonds issued at lower rates, prompting investors to rethink their strategies. Adding to the complexity, the Federal Reserve has hinted at slowing down interest rate cuts in 2025 due to inflation concerns. This move has reinforced the upward trend in yields, making the bond market even more volatile. A historical perspective. Could the US dollar lose its crown? While the US dollar remains the world's dominant currency, history has shown that global financial shifts are inevitable. Before the US dollar took center stage, the British pound sterling was the world's leading currency. However, Britain's financial dominance eroded due to war expenses, economic instability, and the rise of stronger economies. A similar shift could happen again. Countries like China and Russia are actively working to increase the international use of their own currencies. Trade agreements that bypass the US dollar, such as deals between China and Russia using the yuan and ruble, are becoming more common. Even in the oil market, long dominated by the petrodollar system, there are signs of change. Some Gulf nations are considering accepting payments in other currencies like the yen, or even digital assets. Final thoughts. A gradual shift, not an overnight change. While the US dollar is unlikely to lose its status as the world's leading currency overnight, the cracks in its dominance are becoming more visible. Countries are carefully reducing their dependence on US Treasuries, diversifying their reserves, and exploring alternative financial systems. Whether this trend continues depends on a mix of factors, including US economic policies, geopolitical tensions, and the development of competing financial networks. For now, the world is watching closely. If more countries follow the trend of selling off US debt, it could mark the beginning of a long-term global financial shift, one that reshapes the way money moves across the world. Stay tuned for more updates on this evolving financial landscape. If you found this video insightful, don't forget to like, subscribe, and share your thoughts in the comments below.